Hello, Warriors. It is now summer. Let's have a great summer trading season. Gavin, AJ, Brand. Who else is around? Michael, Paul Penman. Okay, let me get to the charts here and start talking.
It's the longest day of the year, Dale.
Right, the longest day.
It's all downhill from now. It gets dark from tomorrow.
I don't know if the nights get shorter first, but I don't know. Anyway, it's a solstice. Gann believed in the solstice for potential reversals. What's going on here? Okay.
Not seen your chart as yet, mate.
Yeah, I know. Here we go.
There we go.
So yen. Start off with the yen. Looks like it wants to make another try at the highs. What are you thinking, Ryan? Maybe Blake's going to get his 43 number. Yields are up a little bit today. Pound really, to me, looks pretty critical at this 127 level that it's bouncing off of right now. Yeah. Underneath would kind of look like a false breakout.
Yeah, playing the big figures with this one. 128 solid, 127 was solid, 126 was solid.
Okay.
You don't need any lines for this one. Just anything that's got double O in it.
Okay. Aussie weakness following through, coming close to yesterday's lows, excuse me. And I think you got what you're looking for in the yuan, 720. I think you were talking about yesterday.
Yeah, I've got a little bit of a breakup. It's 50-50 whether it's going to hold this move above those prior highs. Around that 719, but it's ticking up. It's ticking new high prints, and that's encouraging to keep the trend in play.
Okay, the silver really got smashed, so there was no one in here on the team that was saying, you have to be long silver yet. So 22 should be somewhat easy to accomplish, or down here, this moving average 200-day 22.5. See what kind of reaction we get from here. And gold still hasn't broken down, right? So we need to close under 1920. That'll open the door for a lot lower. And one of the reasons I didn't like silver was how the silver miners were acting. So here's the juniors, about to take out the March low. Okay, so silver's not even close to the March low. And the silver miners here's AG, which had earnings problems. That is new lows. And even some of the stronger ones are challenging March's lows as well. Look at that. So I think there's going to be a great time to buy these. I just don't think it's yet. I'm thinking late July. I read a little tweet. Rickards is saying August 22nd. It's going to be the biggest monetary shock that the market's seen in decades. And I think that's when the BRICS are launching their gold-backed currency on the 22nd. So that's what I read from Rickards. A lot of the,
Interesting.
Yeah, so pay attention in late August. S&Ps, coming off a little bit. Still need closes back under 43.50 now to get back inside the rising wedge. And this gold-silver ratio really exploded when silver got killed. Looks all right. May have some more upside, which tells you, gold's not going to drop as fast as silver. So that's about what I'm seeing. What's your feature top of mind as you come in here? Are you surprised at the last few days of cable weakness here?
I'm a bit surprised this morning. I am and I'm not. absolutely horrendous inflation print this morning. Headlines went unchanged. The core went up 3 pips when it was supposed to stay unchanged. Lot of pressure now on the Bank of England tomorrow. Market ramping up rate expectations to 6% by year end. Some even calling a 50-50 on whether they go 50 pips tomorrow. And through all that, the pound's dropped. Now, is that what we were talking about yesterday, where all the other stuff, the mortgage stuff, and that stuff is all filtering through? That's still going on in the press and everything. So, and if they do hike 50, is that seen more as a panic move than a solution? And that's negative for the pound. So it's a bit of a coin flip what the pound does. I would favour that we may see, if they are hawkish tomorrow, we may see a bit of a confirmation pop in the pound, but how long that lasts would be my worry. So I'd be careful for pound longs tomorrow, of which I am one.
Good morning, Ryan, and good morning, Dale. I just wanted to ask a question because of this, the price action that we're seeing in the cable this morning. I wonder, I was just talking to yesterday. I was talking to Richard Matthews, Dickie Matthews, and he. I mean, not only him, but there's so many people that really, really are. I guess I could use different words by describing
bearishness.
The Bank of England right now, but I just say that people really are very downbeat on are dovish on the Bank of England. How about that? No, but people really think that the Bank of England is a bunch of clowns right at this moment. Do you think, and this is in your opinion obviously, and and I know Dale, you're gonna bring in all the other team, and I'm just wanted to ask this question though regarding UK Bank of England price action, is that people just don't believe that the Bank of England is willing and has the balls to take a step to quell inflation. So you guys are heading into just a straight up deflationary crap storm moving forward, and maybe that's the reason why the cable got sold, because everybody's like, I see the strong inflation, but they ain't gonna do shit about it, right? I mean, do you think maybe that's the attitude?
It's twofold. Okay, as I've been saying for months, the UK and the Bank of England has very little impact on inflation with monetary policy, because a lot of it is imported, and then that leads to domestic inflation. The Bank of England 2 years ago, they could have hiked rates from 0.5%, 1% to 4% in one hit and left them there for the foreseeable, and we would see exactly the same from inflation as we are now. On the other side, trading wise, you look at the pound. We know the pound's been strong for several weeks. That's in big part to the fact that the market has ramped up expectations for the Bank of England. Now, that pricing is only going to go so far before people start saying, well, that's enough. You've priced now from 4.5%, 5%. We priced to 6%. How much more do you want to keep pricing? We're not going to price it to 135 in cable. So there's a bit of toppiness, I think, in terms of rate expectations. But in answer to your question and the bank, there's always questions. Should they have acted bigger sooner? It wouldn't have mattered. Inflation's going to do what inflation's going to do. I expect inflation will start coming down probably in August, which will be the July numbers. We've got a lot of energy price hikes rolling off in July. That's going to fall out. A lot of these temporary factors, energy support, is going to start dropping out. Does it mean we're going to start seeing drops as big as we're seeing in Europe and the US? No, but it should start moving in the right way. And on that basis, if the BO want to long it out and not get too hawkish and risk crunching the economy, then they only go 25, and they'll keep a cautious tone about further hikes, and they'll just try and play the clock rather than play the data, if you get my drift.
Yeah, I do. Hey, I'm sorry, Dale. I hate to cannibalize this. I got one last question. Do you think this is the reason why the UK is such an outlier here is because you guys had to deal with Brexit and no one else did? Well, I mean,
yeah. Well, people going about Brexit, and they're making comparisons between German yields and UK yields. Well, Germany's in recession and the UK's not. So, what does that say about Brexit? Brexit's the old excuse. It's the easy excuse that people will be using that when I'm 105.
That's the American excuse.
Yeah. Exactly.
All right. Hey, I will. I'll let Dale continue on here. I just
Right.
had a couple questions. Sorry, Dale. I'm out.
No, never, no need. Copper rallied back to resistance. Looks like it's rolling over. I don't think that's a great sign. I mean, this was an important area, so it poked its head above it for a while, but getting a negative candle here. I don't think this copper decline is over yet. And I wanted to show you guys, when you say the Goldman Sachs, they're not just a bank where, they're trying to make money on the spread. Look at this chart. Kind of best of breed. And, probably not, it's not a regional, that's for sure. So this is how the XLF looks. They just took out, to me, looks like just a simple ABC, and we're headed down. All the banks look like that. Here's the regionals. Regionals look a little worse. I see 2 drives on the regionals, which tell me there could be another. And I think that might be enough to rattle risk. So banks really not participating at all in the recent rally that we had in the market, and S&Ps might have a chance to end this overthrow. I want to bring Kay in, and Kay, your impressions of overnight action.
Good morning, everybody.
Good morning, Kay. What are you thinking?
Actually, Blake was asking why sterling came off. It's just because I took profit this morning on my long sterling. So, I mean, it's just a price action, my friend. Flows.
I think that
I knew it. I knew
that
it.
crossed Reuters. It said Kman covering.
No,
Reuters.
yeah, I agree with what most has been said also with Ryan, and also it's not because inflation is ramping in a country and a central bank has to hike panically to put the rates higher that de facto the currency will be stronger. We have been trading that for a long time, but correlations come and go. And when I saw the inflation number come out, the move was actually done a little before the number dropped. And I reckon I'm more neutral on sterling, let's put it that way right now. I really want to see if the data are going to be continue to be supportive for sterling or not. But I am not going to continue to be bullish sterling just because we have the Bank of England raising rates tomorrow. There's rates, and then there's what else is going on in the market. And regarding the yen, 142, 142 and a half is really a zone I'm paying very, very close attention to. I've got some leftovers of my long options, but I think today may be kind of where I decide to hedge, to go fully hedged. I'm not really going long yen as such. Still think it's a bit early and it's costly when you're long yen. The funding bites every day. But again, overnight we had, or very early in our morning, we had a few comments. So most of the Bank of Japan members are still there saying not sure that they will move in July or so. But Ueda has this one word by one word adjustment that he makes. And this morning it was something about he's relatively happy about the capex in Japan. And if it's and Ryan came up with a great name to call it what is it? Snailonomics?
Snailonomics, yeah.
Snailonomics. That's probably what it's going to be. But I'm starting to feel this very, very embryonical change in rhetoric all the time. Of course, as I say, it's tough to be long yen, but that doesn't mean that the market is going to go one way. So I am in reflection mode now to see if I need to take profit on short yen, actually, a bit like on the long sterling side. And that's where I'm at right now.
Okay. Euro pound putting in a real nice day now. They tried to take it down. It's turning.
I have the impression that we may have been close to an intermediate bottom there. I had a level at 85.10. we came just shy of it, and yeah, I think this is
pretty classic 1, 2, 3, isn't it? Here's 1, here's 2, and here's 3, and the RSI reading stayed well above 30 on drive 3. So yesterday we were talking about maybe a rally back to the breakdown, the 86.40 or so. And really, when you look at Euro compared to even cable now, that sure looks corrective after that big move on Friday, unless it just rolls over. To me, that's, this is just working the overbought condition off, not in price, but in time.
Yeah.
And, it looks like there's another wave. I'm open to getting to here. 112. Okay, so
it's very possible, because again, we are going to be data dependent, but the ECB has surprised in the sense that Lagarde was not shedding her hawkish wings, so she's still ready to go. Of course, there as well, it's about inflation, but then I think the market is a little. I think the market got a little surprised, and I wouldn't be surprised, let's put it that way, to see euro buyers on dips, and we see it through the euro crosses as well.
Okay, because it's holding up well. It almost looks like it's flagging, just some type of consolidating last week's gains. Aussie, probably the weak sister against the dollar. So maybe we're going to trace 6.5 first before it tries to make another turn. So Aussie back over 68 will neutralize it. And still, we're glad that you just have your physical position on, not leverage. That was one hell of a hit. 70 cents in a day, without dollar strength, without interest rates moving higher.
They were moving lower, actually.
Yeah, I don't know what was behind it.
Well,
it happened.
We talked about it again on the Flow Show this morning. It just feels like the market knows there are plenty of stops below 1913 gold, and this just trying to get the market to push towards those, and it might well succeed. And if that happens, I think we have another $80-90 to the downside, 1840, 1850, and silver goes to 22. Like we've been saying, I've been saying, I think it's a 50-50 chance, maybe slightly more than 50-50. Hence my
it flips.
Yeah, exactly. So yesterday's move had absolutely no rationale to it, and so I will chalk it up as a stop hunt or some kind of game that they usually play. You know how it is. Meanwhile, COMEX inventory is going lower every day. LBMA the same. At some point, these futures are linked to physical deliveries. At some point, it's going to make a lot of sense to buy a future, take it to delivery. And, the physical has a 30-40% premium. So not a bad thing to buy something 30-40% lower than the actual price you're going to be able to sell it for. Anyway, these games keep getting played for years and years. At some point, I think fundamentals will prevail. But until then, there's a lot of volatility. And if you leverage, you can get chopped up very, very easily.
Okay. Steve, how are you? I thought I saw him here. Yeah, he's here, but he's busy. Anyway, Steve. Yes, Steve,
I'm here. You got me off guard.
Okay, good. I want to ask you for your commentary on what Paul said last week. A lot of people very critical about that. It seemed confused, and his messaging wasn't really that great last week. Did you listen to him, and what do you think? Just more?
I didn't listen
babble?
to it.
Okay.
I saw the transcripts. I'm not sure. I think
Okay.
the confusion comes from the part that I don't even think they know where they're headed from here. Supposedly, this is a pause. I'm not sure even if they believe that. I think we are at best at wait and see mode. I think the next big move for rates is probably lower. Now, does that mean that it's completely unlikely to see like another 25 or something like that before we reverse? No, it's not completely unlikely, but the more the time passes, the lower the probability.
Okay. Any comments on S&Ps? Do you think that this little pullback, what's it been, about 40 handles, 50 handles, is just that they're going to be buying every dip? Or could
I
there
think
be
that
a
for the time
surprise?
being, I don't see anything here that points to anything else than a very orderly pullback. I mean, nothing moves in a straight line. We had a very big move higher once we broke through the 42 and change area. We got a very nice thrust towards the 44 or 50 level, and it makes sense to see a little bit of a pullback, but I don't see anything that points to some kind of a reversal. I think 4,300 is support from this point forward. So, I mean, especially as long as we trade above 4,300, I see absolutely no argument in favor of the bearish thesis.
Okay. And rates, bonds are trying to turn.
Yes, although rates are now trapped in a new area. We had the 330, 360 area for quite some time in the 10-year, right? So we were trapped there for quite some time. We then broke to the upside through the 360 area. Yeah. And now we formulated a new range, which is the 360 to 385 area. So nothing to do as long as we trade, in between these two levels. We break through 385, then we're looking for more. On the other hand, we break through 360. I think that's going to be quite a bearish development, opening 330 again. When eventually we break through 330 also, I think that's probably going to be confirmation that that was the end, and we're headed lower.
Anyone on the team have a view on crude? Should we be long here?
It's range bound between 67 and 75. I wouldn't touch it with a 10-foot pole and Stelios's silver money.
Or a 10-foot drill.
There you go.
I think crude is not, tradable at the moment, the way it's been behaving.
Okay. What do you think of the VIX?
The VIX is clearly bullish for stocks, right? The VIX has stayed under pressure. We're at multi-year levels, consolidating. So, I mean, VIX is also a testament, a confirmation that until proven otherwise, equities remain bullish.
Okay. All right. A lot of complacency, that's for sure. So
Dale, I was just going to say, guys, we're about 7 minutes away from Canadian retail sales data.
Okay.
That we need to take a look at some of these Canadian.
All right, why don't
pairs.
you grab the screen then, buddy?
Yeah, we're running low on time. And good morning, Steve, and the rest of the team that I missed a little bit earlier. Hey, the reason why I want to bring up the Canadian is because the Canadian is trading so damn weak. I tried to play this to the long side, and I think a lot of people did when it was down at this really very big support last week, because the biggest issue that I have with the dollar CAD is that we're trading and we're consolidating below like a longer term 38% retracement. But we had this like range breakdown last week. Like I said, I was trying to play it off the range. It was good risk reward, just didn't pan out. Anyway, the scary thing is it just consolidates below 133. Now, obviously one of the things that's going to help the dollar Canadian higher is if crude oil does weaken. But as Dale, you just brought up, I mean, crude's kind of directionless. I don't know if I'd really necessarily be bullish because there's so much support down in the mid 60s. But then again, every time we get our head above the 72, 73, 75 level or 74 level, we get smacked down again. So, anyway, but you'll notice that this dollar Canadian's below this long-term 38% retracement. There's the low, there's the high. We're just kind of trading there or slightly below. And we can't get our head off the mat, if you will, with the dollar CAD. Now, I think a move back above like 132.70 is going to ignite some short covering, but really you have to get all the way back above 133 to get some continued short covering in the dollar CAD. So anyway, I just wanted to bring that up, but you could take a look around at like the Canadian yen, which would be, you know, another one that I'm following pretty closely because it's up against channel resistance and near the 78% retracement. And as you all know, especially those of you that watch the week ahead videos, you know that we're up against, you know, 30, 40 year trend lines on so many different currency pairs, so many yen pairs. It's a little nerve wracking when you are at those levels longer term. Like here's the Canadian yen. You can, you know, take a weekly chart and, you know, start really looking at this longer term and going, holy cow, you know, these are, you know, big resistance levels from, you know, back in 2000. Here's the, you know, the GFC, but you can actually take that all the way back here to 1990. And you're really running into some pretty key resistance up here. That's why, you know, I think it's, you have to start being a little bit more careful, especially with these crosses. If you're dealing in dollar pairs like the Canadian. So we have about 4 minutes before the retail sales data out of Canada. Ryan, Kman, or Stelios, since you guys were on the Flow show this morning, and by the way, if you all are listening in right now and you don't listen to these three guys in the European hours, I'm sleeping because, you know, I am a human being and I have to sleep, you know, at some point during the day, as does everybody else here. So I'm asleep during the Flow show, but did you guys talk about the Canadian at all? Anything that has your attention ahead of the Canadian retail sales today? Let's start with you, Ryan. Yeah.
No, we didn't.
Oh, you didn't? You didn't even mention it? Here I go, pumping up the Flow show, and you guys are all infatuated with UK inflation. Jeez.
We just about squeezed in at the end that Powell's speaking today.
Oh, okay. And he is speaking today. Okay, so let's hear some thoughts regarding the Fed chair, Powell. And my opinion is he could really, you know, he could look at the market reaction and say, you know, I need to stop this. You know, I need to quelch this a little bit. I mean, what do you guys think about Powell going into today's testimony?
Who wants to take that one? Okay, Stel.
Stel? Maybe he disappeared.
Sorry, I have a minor emergency. I'll be back.
Okay. I reckon that he's going to do exactly the same as he does usually, and that is to try to walk the fine line. His text is out already. There's going to be a lot of grilling again, but he will perhaps say that there's nothing to be dovish about yet. That's my
Yeah, and that could, you know, put some pressure on equities. By the way, equities are trading at their lowest levels right now on the S&P futures. DAX is showing a bit of a reversal after the false breakout last week, in case you missed it. Yeah. Kman, thank you for your thoughts. And I couldn't agree with you more. You know, this is an opportunity for him to you know, try to be a little bit more hawkish, to walk back a few things, because the market's obviously not listening to his words. And I think this gives him a chance to clarify some things. And I'm in for the circus act, guys. I don't know about you. We're going to have a boatload of politicians asking you know, the Fed chair some very silly questions. So I'm in it. I'm going to just grab some popcorn. I think it should be a good time. Dale, you have any thoughts as we
Powell's a politician too.
The independent with a lot of wealthy friends.
Yeah, the independent Fed is a political animal. So that's my view. And right. I always put on Johnny Lang's song, Lie to Me, Tell Me Everything's All Right, anytime he has to say something.
A beer just said, hey, gold just broke 1930. Yeah, it just took out the stops below 1930. It did. 1925 is going to be pretty key support. Here comes the Canadian retail sales. Stand by, everybody. Here it is. Retail sales strong. Look at that.
Look at all that
House
Crown
price
Royal
index.
that's selling. Yeah,
Woo, I'm telling you, we haven't seen much.
they have flavors now.
I'm surprised the Canadian strength didn't come through. Now you got a lot of people that are just like they're like instant algo buying Canadian dollars, no follow through. They'll rethink that position here shortly, especially if you have stocks that are showing some signs of weakness. The Canadian tends to get sold in those situations, but I wouldn't do it. Oh, that data was strong. Holy cow. Anyway, I want to say
There it goes.
Oh yeah, it's starting to leak out a little bit there. A little delayed reaction. But Dale, I know you have a really good macro guy coming on.
Yeah,
Andy Constant. I didn't pronounce his name. I was going to mispronounce his last name. Constant coming on. So really excited to have him here. So make sure you all stick around for that. I want to say Kman, Ryan, Stelios, Steve, thank you all for being here today and every day. And Dale, thanks for guiding us to the light.
Okay. Bring a flashlight when I'm your guide. Thank you, Blake. Thanks, team.
Guys.
Thanks, guys.
Welcome. Thank you, Steve, Stel, Kman, and Brian, and Andy. Welcome back to F.A.C.E. Great time to have you. How have you been, buddy?
I've been great, Dale. How are you?
Okay, so I have to ask Andy, have you been converted? Is this a new bull market?
Absolutely not. I have not been converted.
All right, good. I was hoping you didn't have a bullish bar mitzvah, and that you flipped. Bears taking a lot of heat, even though we're not always short, but we're always looking for opportunities on both sides of the market. So you have some visuals to support your view as to why you're not bullish?
I don't.
Okay, then
that's not my thing.
Okay, then I'll move around. So tell me what's top of mind for you in the last say week or so. We had some harmonic patterns that topped above was a Gartley above 4,400, and I have this wedge line that we're in an overthrow, and it looks to me like if we could get back under 43.5, that would be the first sign that potentially a top is in.
Sure. So last time we talked about 3 months ago, it was like the week after the banking crisis. I was covering my short in SPX and selling bonds. And, that worked out. I ended up selling on the way up. So I'm short equities here and short bonds. And the combination of, in particular, short 2 years has more than offset the losses taken on short S&P. And, I think that what we've seen was that the banking crisis was a tempest in a teacup. There'll be more banks to fall. But, my view at the time was that a few banks got over their skis, long duration, and were taken out for that reason. And then since then, we've just had, we had the debt ceiling crisis. That was a wall of worry that resolved. Where we are today, we're at a interesting point. Your graph is interesting to me as well, because we have an interesting quarter end setting up.
Okay.
In particular, there are large rebalancing flows. Rebalancing flows are, a portfolio that starts at 60-40 now being 65-38 or something like that, which requires some selling of equities, buying of bonds. And the vol targeters, the ones who lever up their portfolio when vol is down and delever their portfolio when vol is up, have by and large, you look at the VIX and have been by and large buying all the way down here as they've been levering up their portfolio. And they may have some left to buy, but they've reached, from my work, they've reached their near maximum leverage. So their buying will probably be minimal for assets at quarter end. And so those are the big flows. And then, of course, there's this extremely large collar that expires on the 30th. That is a dealers are long options, long calls. And
that was a collar over 42 that we took out, right?
Well, no, it's 43.20 is the strike.
Wasn't it 42 prior? 38.42? Or was it always 43.20?
Well, every quarter it rolls.
I see. Okay.
And so this quarter, which was set on March 31st, rolled up the call strike to 43.20. And, we're right around there. And that's about $15 billion of dealer gamma long. And it should tend to, right now, the Charm and Vanna flows are negative, so they are not supportive. They are caps. And if we go higher here, which is possible, the delta goes up to 1, and then there's no more overhang of the collar delta. But if we go back down to 43.20s, I think we stick there for the rest of the month. So I think it's an important level. And
the writers wanted to, peg it. They want to peg it so both the puts and calls expire there.
Right.
That's
well,
their goal.
Their hedging activity forces the market to that strike. And that in combination with the selling that we're likely to see from, traditional pension rebalance should drive us lower in the near term. But that's very technical. I think the higher level point still remains that, Powell will, his testimony so far looks like it's hawkish in terms of the speech. He'll be higher for longer. I think it was a big deal that they raised at the last Fed meeting. They raised the terminal rate to 5.6. That was very high. Even my expectations, I'm very much higher for longer, and have been for almost a year now. The 560 number was pretty much, as hawkish as they could be. And, that is still taking a long time for people to believe. Hikes are now cuts are now out of 2023, but you still have, 150 basis points of cuts built in between that now and 2 years from now. And, that's pretty, it's not taking the Fed at its word by any stretch of the imagination. So if they end up doing what they say, which so far they've been doing what they say for a year now, the
market challenges them every time.
Yep. And they just don't believe. And so the 2-year note is still,
what I don't believe?
Yeah, what's that?
The banking crisis is a tempest in a teapot. Whether or not there, as Yellen said, further consolidation, which is code to me meaning failures. I look at the regional banks, and it's not complete. There are new lows coming, in my view, in the banks, and you can't just say it's only the small regionals. Take a look at Goldman. During this huge rally that we've had in the S&Ps, a blow-off parabolic in certain sectors like tech, semiconductors, the banks, the XLF, Goldman being, best of the breed, looked like all they managed was a bear market rally and they're headed lower. What's the problem? What's the problem with the banks?
You take 8 stocks out of the market, and you can't do that, but you take 8 stocks out of the market, and the market doesn't look healthy at all. Banking.
But what about these banks, though, Andy?
So coming back to KRE, I don't think KRE. You might be able to trade it, but I don't think it's investable to go long because. And I don't happen to have a bank failure idea as being the problem. I think they can, with the BTFP, the liquidity programs around. and the deposits are not fleeing as expected. It really is about solvency, and most of the rest of the banking system is solvent unless there's a borrower credit problem. And a lot of people are worried about CRE, and I get that. But you look at those stocks that are exposed to office space, and they've actually been doing pretty well. But the CRE is a potential credit event. But for now, the duration event is of higher long-term bond rates reducing their asset values, and the deposit flight is not a concern to me. But the bigger point is that these banks are going to be significantly the regulation on these banks is going to be significantly increased in regards to the type of risks they can take. And
Paul told them to take the duration risk.
Yeah,
at the years ago, right? I don't know why he didn't tell them to liquidate or hedge. He knew what he was going to do to the banks. It almost seems intentional that they just want to have a handful of banks, their buddies, and actually they want to become the bank, and they want to be the treasury. Yeah, and that's what CBDC is all about.
The funny thing about that point, which I get that arc. The funny point about that point is that nobody else believes Powell. Why did these banks? If there is some sort of intent that they were supposed to go, I honestly don't think they had a lot of choice. But if you look at a good bank like M&T Bank that didn't buy long duration assets, and while Silicon Valley Bank did, I just don't know about that idea. But I do think consolidating of our banking system makes sense, and I think there's tremendous regulatory headwind on these companies, and then there's the credit risk. So I don't think you can buy regional banks at
here's the XLF, the big guys that were the beneficiaries of the flight capital, and their chart doesn't look much better than the regionals. Now the magnitude of the drop was bigger in the regionals, but the form is the same. Drop and then consolidation. So what's wrong with the banks?
Yeah, I mean, I think they have a period of time in which the cost of their financing is going up relative to the return on their assets. But these big banks and their balance sheets are bloated with long-term treasuries. They've been selling treasuries for over a year now. And, those treasuries just don't earn what they need to earn. So there's going to have to be a balance sheet renovation that takes a couple of years. And so that's going to put long-term pressure on intermediate term pressure on bank earnings that have been, benefiting from very cheap deposits and fairly high interest on their assets. And that's shifting. And that it doesn't mean these banks go to zero. It means these banks are going to have earnings problems for a couple of years.
Okay, so here's TLT. We're going to come in a little bit lower here. Looks to me that, we're on the verge of turning pretty good. I know the 10 years up, but Andy, to me, I'm going to take the opposite side. I don't think we're going to break out here. It's a huge descending triangle, which implies a top. If you go back to classic stuff like Edwards and McGee. And back under 360, the 10-year will challenge 330 and eventually break down. Now, I think, and I want your comment on that, it's not because of what the Fed is going to do. I think it might be a risk-off event that gives us a pop in notes and bonds. What do you think?
Yeah, so my destination for the economy is a hard landing. That destination is being predicted by markets, including 10-year notes, but more so in the front end of the curve, for a long time, and they've been wrong. And so the question isn't whether there is going to be a hard landing, which will generate 10-year notes 3% or lower. It's a question of when. And in my view, that when is a lot longer than most people think. And so while a risk-off equity sell will be bullish for the long end of the curve, for sure, and that's a a natural reaction for money flows. I think that the next way that the market plays out is the continued bear flattening that's been going on for a while now, which means more twos, tens inversion will continue, and that'll keep a floor under how low 10-year yields can go, because that negative carry is just extremely difficult for anyone who wants to go long 10 years. So I'm short 10 years. I've covered a lot of what my short was, and but I'm very short fives and very short twos, and have no position in TLT. And I get the idea that TLT looks technically good, but I think that the way the market plays out is that equities stay supported longer than people expect, and ultimately the recession, the people that have been continuously calling for a recession for a long time, are surprised by positive data and give up on their long-term bonds and are a bid for stocks, even though stocks are extremely rich in my view, and that causes a steepening from once we get a more full inversion, which is what I'm expecting short term, we get a re-steepening of the 10-year that takes it above 4, maybe 4.25, and TLT doesn't bottom until it's got certainly a 90 handle on it, but possibly low 90s. So I think that's the play that we end up with. So short term bear flattening, longer term a steepening around a 2-year note that basically hits terminal rate, and then an equity sell off into a recessionary period where
you don't think is that put off till 2024?
There's a question about when it gets. So these things tend to get front run, but I don't expect so it's sometime in that period, but these things get front run. But right now you have just no supply in bonds. So because the Treasury's chosen to issue bills to refund its liquidity, and you got to have somebody sell the bonds for them to widen out here. And until China potentially has to sell to defend the yuan, which to me looks like it's heading to 7.5. Tokyo, Japan, the MOF and BOJ have to defend the yen to the extent it breaks to new weak levels, both of which I would think are inevitable, both the yuan and the yen, because of the weakness in their economies. And they become sellers of treasuries. That might generate some supply. And then by August, we get the Treasury's plan for issuance now the TGA will be rebuilt, but we'll start to see if they start issuing bonds in August. And I guess the last thing is I expect that the quantitative tightening done by the Fed, which is being done by runoff instead of market sales, is going to have to become market sales eventually. And when it does, that'll create a duration supply. So yeah, I'm thinking the second quarter will be, the rest of the summer will be about bear flat and further inverting. The September period will be higher long-term bond yields, and then toward the fourth quarter you start getting some recessionary impact on equities.
Where do you want to buy gold, Andy?
Yeah, so gold is going to suffer with real rates rising, particularly longer-term real rates rising. And so, right now, on Thursday I shorted gold, commodities, bonds, stocks, pretty much everything, every asset as part of my book. And so I'm not a buyer of gold until it's until I start seeing a real rate top, or I could imagine in the, the 1850, 1870 range, maybe for a trade.
Okay. All right. And silver's been leading the way down. What else are you focused on? You have a dollar view?
Yeah,
Dollar
so
rally?
I was
Go
very
ahead.
aggressively short the yen for about a month, and I took that off against both euro and USD, and I took both of those shorts off the day after the I guess Friday, when the BOJ said,
Yeah.
as I expected, that they're going to remain easy. I think there's probably, I don't think you want to be long the yen here, but we had a big run on the short side, and so I wanted to take profits on that. The next currency that I'm looking at is US dollar, and I expect that will, and this is a little it's diversified relative to my other views, but I don't love the dollar. It's overowned, overbought by most institutional clients that I follow. Most institutions that I follow. And I'm looking to find a good short on that. I think the best short is going to be the euro. Go long euro USD. I'm looking to do that at around 108.
Okay, because that was pretty decisive. I like it, and the pullback compared to the other currencies, Andy, has been the shallowest. I mean, look, there's euro, cable's been weaker, and commodity currencies even worse.
Yeah, I mean, I think the USD is gonna weaken, and I think the euro is the best pair to do it with. I think also potentially your GBP is a decent long.
Oh yeah, that turn, euro pound turn.
Yeah, I'm looking at that. I think the
there.
pound is probably, the pound and the dollar to me are the most vulnerable currencies besides the Asian ones. And again, I think we're going to 150 on yen versus dollar, and I think we're going, we could see an August devaluation in the yuan.
Okay, hold on. You know what else is happening in August? I read, Rickards is saying they're launching their new gold-backed currency August 22nd.
Yeah.
What do you think? It's a brick currency tied to gold.
Yeah. I guess that would be ultimately bullish gold, but I think we have some work to do before you can do that.
Yeah. Okay. Just new event that I wasn't aware of till yesterday.
Yeah, I'll look at it. I haven't seen it either, but I'll look for it.
Okay, and I think we've covered the board. Anything else? Agricultural commodities. I'm not sure if you cover them or not.
I don't play them, but we can talk about oil.
Okay.
I think
there's wheat. Build a silo in your backyard, Andy.
Yeah,
and fill it up.
Problem for agricultural for me is I just can't forecast the weather very well.
And that's what you do every day. You're a financial weatherman.
Right.
All right.
So crude, I think, is down on China being weaker than expected, and I think that's and the various cuts that are being done are just inadequate to deal with the reduced demand from from Asia in particular. So, I think we can see a real sell-off in crude. Though I don't have a position at the moment, I think it's an important part of the commodity complex and could drag other commodities down with it.
I would try it down here.
Yeah. We had that big Pierre Aderode sell off on that one wick down in May. I think you're going to have a sell off like that. And I think he's mostly out. So anyway, I think it's that is where it starts to get interesting to me as well.
Okay, I just want to show your site, buddy.
Thanks, man.
And where people could follow your work. Here you go. So
Yep, on that site we have a bunch of my old damp spring reports for people who are, who want to join our wait list. It's long, unfortunately, but we look, we constantly are putting out free explainers and work on damp spring at damp spring on Twitter. So, feel free to join the wait list or contact me through Twitter.
Yeah, and Andy's pretty prolific on Twitter. He posts a lot. So at the minimum, follow him at Damped Spring. Here it is.
Yep.
And that's the name of his website as well. Andy is really tears things apart to look beneath the surface, and appreciate you being here again, my trading warrior brother. And good luck with your shorts and the S&Ps here. I think we might have a major top, Andy. No, because all the bulls are giving up.
After June 30th, I'm gonna, see where we're at, but I think June 30th is a magnet for now.
Okay, and I think July's a very negative month.
Yep.
Okay, so like everything, time will tell. And thanks for your time today, buddy.
Thanks, Dale. Great to be here.
All right, Andy Constant, everybody. Follow him at Damp Spring. And that's going to be a wrap. Hope you enjoyed Andy. I learned from him every time we talk. And you could join the team in about 19 minutes on the Morning Edge. That's going to be it. Remember, don't just count your pips, count your blessings. Adios, everyone. We'll see you tomorrow. I have Michelle Schneider with us. All right. Take it easy, everyone. Adios. Thanks again, Andy. You're welcome, Tommy, Richard, Patrick. See you guys. Get inside the ForexAnalytix chat for the rest of the day. I'll see you later.